I think we're probably going to be in for a little bit of a wild ride in September. Last summer was absolutely insane for activity. Given what I'm already seeing this summer, I think we'll probably see the same trend line work itself out for this year. I mean, we kind of already are seeing that. So this is January, February, spring market, summer is down here, and I wouldn't be surprised to see fall market and back up here. Condo sales are down 7% since last month. So we've definitely seen a little bit of a pullback in terms of new inventory hitting the market. Now, important metrics. So months of inventory, which we look at regularly.
Yeah.
We've seen actually across the board, not a drastic increase, but an increase from June to July in every single segment.
What is up, YouTube? Matt McKeever here, and we're back with our Toronto expert, Emma Pace. Hey, Emma, how's it going?
Good, Matt. Yourself?
Doing well. And so excited to catch up with you because we're pretty much right in the middle of summer now. So we're shooting this, a couple weeks into August. We're going to be talking about July's numbers for the Toronto market. I'm sure we'll talk a lot about condos as well, but usually the summer is a pretty slow kind of season. Everyone kind of takes off for the summer. And last year, it was kind of like that, but then it really heated up in August and September. And so curious, how's this summer compared to other summers so far?
Yeah, honestly, I think this is probably one of the slower summers that we've had since I've started in real estate. It's been 6 years, but I think it's just, a compound effect of everybody having been locked down for so long and now just opening up and saying, hey, look, I've been looking at real estate. I've been so focused since I've, been home for so long. I just want to kind of take my eyes off this for a minute, relax, kind of enjoy my life a little bit. And we usually see that in the summer, but I think it's just compounded this year with people having the availability to go to restaurants or book a cottage or travel or whatever. But with that being said, I think in the last, week or so, I'm starting to see people come back from vacation or taking time off and saying, hey, should I consider jumping into this relatively quickly? Like, should I get into this before Labor Day? So I think we're probably going to be in for a little bit of a wild ride in September because I'm already starting to see that ball roll back. But I think we've got, another 4 weeks of probably a bit of a slowdown.
Gotcha. Yeah. Well, excited to jump into the numbers. And I know, in my opinion, there's even a little bit of game theory now when we're thinking about the real estate market compared to maybe prior seasons, because I could see, again, a lot of demand coming into September where people are like, ooh, if I'm going to buy or move, I want to move when there's probably less restrictions or when I know things are open versus potentially risking it come winter or early spring. So I think it'll be really interesting to see how the next 6 months shape up, but excited to see how the last month was for you in the Toronto market.
Totally. And I think just to that point too, while I share my screen here, it is really important to understand that, since the beginning of this lockdown, if that is a concern for some people, and I'm sure it is for many, is like, hey, I'd rather move while everything is open. We have been considered essential since the beginning because ultimately, if there are transactions that are under contract, meaning someone puts something under contract now while things are open and then things shut back down, it would be unfair if they're in the middle of the contract to force them to be in breach. So for the most part, real estate has been considered essential. Of course, we have restrictions in terms of open houses and that kind of thing. But at the beginning of the pandemic, we have been considered essential. So if that is a concern, understand, like, through the couple of lockdowns that we've gone through, moving and all that kind of stuff has stayed afloat. But it absolutely does make sense that people would want to kind of do this while it maybe is a little bit easier to book contractors or movers. That kind of thing. Right. So, so let's dive into the activity. We'll go over the kind of year over year, month over month market performance. I'm just going to zoom in here a little bit for you guys.
Perfect.
This month, I I think it's a little bit fortunate, but we've seen a bit of a pullback kind of across the board. Condos are relatively flat. We're down like, a quarter of a percent or so.
Yeah.
So price point is 715 versus 717 last month. So not much of a price differential, relatively flat. But we've seen a little bit of a decline in condo towns semis for the second month in a row now, because semis were down about 4% last month as well. And detached were flat last month. So average price point for condo townhouses is 791. So we've dipped just under that 800K mark again. Semis are back around 1.2, and when they were kind of almost a bit closer to 1.3 last month. And then detached prices have come down from almost 1.7 to 1.63. So we've seen a little bit of regression in terms of pricing, which I think, ultimately is a little bit of good news, because I think that at the beginning of the year, those numbers were just absolutely insane. You're seeing like 7 month over month, that kind of thing. So we've seen that pull back a little bit, which is quite nice. So overall, I mean, if we look at the year-over-year numbers here, detached prices are still up July over July. Semis are up 2%, condos are up 9%, and condo townhouses are up 9%, and condo apartments are up 5%. But month over month, we've seen a little bit of a pullback, so a little bit lighter for buyers out there, which is nice. And then obviously in terms of number of transactions, last summer was absolutely insane for activity. Like you said, Matt, so the summer was just absolutely wild for number of transactions in the freehold market last year. So to see us down 23 to 25%, I'm not overly surprised, because we just saw so much activity with people being locked down and real estate being the only thing that they could have done last summer. And then, we've seen a little bit of upward trajectory year over year for condo townhouses and apartments. But that's because we were seeing a drastic slowdown with people, exiting downtown, because there was obviously that uncertainty with what was going on. So to see those numbers looking that way year over year from a transactional perspective and sales numbers, it makes sense to me. And then again, just a little bit of a different visual for kind of year over year if people wanted to look at the graph this way. Now, important metrics. So months of inventory, which we look at regularly.
Yeah.
We've seen actually across the board, not a drastic increase, but an increase from June to July in every single segment. So detached is up a little bit, semis are up a little bit, row houses up a little bit, condos are up as well, probably the highest growth, which is 0.2. It's not drastic by any means, but to see a little bit of inventory piling up is good news for buyers, because it means not necessarily that the field is leveling out, but it means that sellers are losing a little bit of that leverage, which is probably nice to kind of see things evening out a little bit that way.
Yeah, so definitely, we've still got a while to go before we find ourselves, say, in a balanced market. But if anything, seeing the inventory trickle up is definitely promising for those that were maybe hoping to see this catching of the breath maybe last another couple of weeks at least.
Well, considering when we first started doing these videos, the bulk of those numbers were sub 1, right?
Yeah.
And now to see 4 of the 5 segments be north of 1 is a little bit of good news. So, condo inventory since we've started has actually essentially doubled.
Yeah, that's a good point. Yeah.
We were seeing that kind of like hover around 0.8 or whatever. So, these numbers they change slowly. So for anybody that's been kind of following us over the last couple months, every single month you're like, oh, it's only 0.1 or 0.2. But if that happens every single month for 6 months, it can make a drastic difference. So condo inventory has, in theory, doubled since we started these videos.
Yeah, appreciate you sharing that, Emma.
Yeah, no worries. And then what I wanted to go over was a couple of different kind of trends. So pricing trends. If we look here for both freehold and so freehold's on the left and condos are on the right. But if we look at the graphs over the last kind of 5 years, so this is 2016 to now, you'll notice historically August is the lowest sales price, especially for freehold. So we usually do see a little bit of a pullback. And we're going to see, I have a new listings graph as well. So we'll kind of see that pricing and new listings tend to move kind of in tandem together. And reason being for that, especially working with Zoocasa, we notice a lot of trends because everybody starts their search online, right? So if the aren't a lot of listings for people to look at. There's less eyeballs online, right? Out of sight, out of mind kind of thing. So if there isn't as much hitting people's inboxes every day, if they're set up on prospect matches and that kind of thing, they're not going to be as active with their search online looking for other properties that maybe they would have otherwise caught if they were actively searching, right? So typically, if we don't have as much inventory pumping out to people's inboxes, then they lose a little bit of interest. It's the same thing as you going on like midnight to search for listings or want to buy shoes, and then you don't buy it, and you leave it in your cart, and the next day you wake up and you're not interested anymore, right? If we have a constant feed of listings coming out, there's more interest in the marketplace, and we see other listings that maybe were stale get more activity, that kind of thing, right?
Gotcha.
So when we see listing activity down, we typically see prices a little bit suppressed as well. So you'll notice that for condos and for freeholds, we usually do see a little bit of a slump. In condos, it tends to average out a little bit between July and August as well. But I drew these trend lines here so I can show you in a couple other graphs as to kind of what's going on. But usually what you can see in these traditional years, so this is 2016, this is 2018, and this is 2019, which I think are probably what I would consider the most average years to kind of follow, because we saw COVID in 2020 and then some government intervention in 2017. So I try to kind of rule those out as outliers. But if you look at the February prices and the August prices, I just drew a trend line to show that if you feel like you missed the mark at the beginning of the year, oftentimes we do see a little bit of a pullback, and that trend line is almost straight across from February to August in all of these years. So if you wanted to buy something earlier this year and you kind of felt that you missed the mark, I wouldn't be surprised, to see, we actually saw a peak in the market here, so probably March prices. But if you really wanted to match March prices and you felt that you kind of missed that rush, August could be a good opportunity for you, because that's typically what we see on historically, traditional years.
Yeah, really appreciate you doing this deep dive for us, because it really is representative of the cycles that I think a lot of us that spend a lot of time in real estate, and we've been in this for years, we kind of intuitively know, but to see it really laid out for us on a graph like that really hits home.
Yeah, absolutely. So, and then again, I think people, and I'm going to talk about this in a second, or kind of at the end of the video, but like, what are the best times to buy? We can try and time the market. I think as investors, it's maybe a little bit more important, especially if you have certain numbers and metrics that you need to hit. But ultimately, the most important thing is, like, if you're going to buy a property and you plan on holding this property for several years, especially if you're an end user and for your family, like, yeah, it's great if you can time the market and get an amazing deal in August. But like, don't buy a house that you're not interested in living in just because you're getting an amazing deal.
Yeah.
If you have to wait until September, but you're still planning on holding the property for 10 years, you probably will be better off. Historically, in Toronto real estate, you will still be better off buying in September than waiting 3 or 4 years for the perfect property at that point in time. So don't rush to buy something that you're not interested in just because the graph shows that. Now, this is this is kind of the new listing trends that I wanted to show as well. So typically, we can kind of see here that the graphs look pretty similar for new listings and pricing trends across the board. So when we don't have as much inventory or new listings coming out, we often see a little bit of distraction in the marketplace away from real estate, and that's usually when we see prices go down. So we usually don't have as much inventory. Now, in December, what you'll notice here is, December historically pulls back as well. So seasonally, it usually goes spring market is the most competitive, then fall, then summer, and then winter, kind of in order. Now, you're going to see in the summer, you're going to have more listings. So you are going to have more choices in August than what you will have typically in December, okay? Now, what we typically notice is in December, prices are pretty darn close to what they are in August for the most part. So if you are thinking about trying to time the bottom, but you want to have more options, historically, August is a little bit better because it provides you more options at the same price.
Yeah, really appreciate you laying that out. And it is that is a really good insight, again, that usually in December we've got less inventory. So even if you see a similar sort of price dip per se, there might be less to select from.
Yeah, and then the challenge becomes, hey, what is the buyer to listing ratio, right?
Mm-hmm.
And at the end of the day, if you don't have very many listings, you could get a great deal. If you have a bunch of buyers out there, we still need to look at what that balance looks like. So oftentimes, August can be a really, really great time for people to consider buying, because you typically do have, it's typically the same price point as December, but you'll have more options to choose from.
Mm-hmm.
Right. And then what I also did was kind of break this down by transaction volume throughout the year. So I did this kind of week by week. And so what you'll notice, I drew this trend line across to see kind of where we are at now in comparison to the beginning of the year. So we've seen a pretty drastic pullback, like I said at the beginning of the video, because people are just distracted. So this yellow line up here is how much volume we've actually kind of seen. And then the blue lines are kind of the close prices. This is all across Toronto. So 905 and 416. But what you'll notice is the amount of activity that we're seeing right now, like as of last week, don't count this last week because we're only half through right now. But we basically have the exact same amount of volume as what we saw in like January. So the market's pretty slow in terms of transaction volume right now. There isn't a whole heck of a lot going on. It's basically the lowest it's been since the beginning of the year.
Mm-hmm. Yeah, it's great to see it laid out like this.
And then we've got, so what I also did was I went through kind of what transactional volume looks like historically by month and seasonality. So this is 2021, and then this would be 2019, 2020, and 2021. Okay. The reason why I wanted to highlight this was to show exactly what I said before about the hierarchy of pricing and seasonality. So what you'll notice here is this is the beginning of the year. Usually at the beginning of the year, transparently, January is our biggest season for onboarding new clients. Okay. So I'm going to explain why this graph typically looks like this from my perspective. So our biggest sign up week for Zoocasa is often the week between Christmas and New Year's. Okay. And that's because people are like, my New Year's resolution is I'm going to buy a house, right? Mm-hmm. Then all of a sudden, beginning of January, we get all these signups on the site. Hey, can you meet me for a consultation? I want to talk about buying a house. This is my goal, blah, blah, blah. Same thing as a gym, right? So we get a bunch of client onboarding. I pretty much spend my entire January doing buyer consultations, and that's it, right? And so what we get is all of these buyers, some are real and some are artificial, okay, that come into the marketplace.
Yeah.
And so that, what that does is that puts pressure in the marketplace and could artificially inflate how many buyers are actually in the market, because they're also working with agents that maybe haven't gone through a full consultation or getting them to put in offers. But the offers might not be realistic because they might want to get them to sign a BRA or just try and get them motivated to move through the process, right? But what we usually find is the buyers from October, November, December of the previous year get FOMO at the beginning of the year. They're like, oh my gosh, I missed the mark. I should have bought with last year's timestamp. And so what we see is usually January, there's not as many listings out here either, but we have this artificial pressure of new buyers combined with all of the old buyers' FOMO. And then that's usually how we start to see prices increase, okay? We start to see more volume. So typically at the beginning of the year, that's why you see such a steep trend upward in terms of activity. And then what we see typically is spring market, so April, May, and June, a massive amount of volume. That's why I said spring market historically is the hottest market. And then summer, we see things cool down again. And then fall market, so typically second week after Labor Day, so second week of September, first snowfall, we'll see a drastic amount of activity happen again. Given what I'm already seeing this summer, I think we'll probably see the same trend line work itself out for this year. I mean, we kind of already are seeing that. So this is January, February, spring market, summer is down here, and I wouldn't be surprised to see fall market and back up here as we continue to get more kind of dots on that graph. But just so people understand how volume works, most sellers want to wait to this point and this point to put their properties on the market. As more properties come on the market, more eyeballs see it online, more people get interested, they get more active, and then that's kind of how the cycle starts.
Yeah, really appreciate you breaking it down. I've never heard or had anyone break it down like that, but it makes a lot of sense when you lay it out in that manner.
Yeah, and we see this kind of year over year over year. So I think, if people go, where's the inventory? I can tell you exactly where the inventory is. The inventory is going to hit the market between, mid-March to June, and then from second week of September to probably first week of November. And you're going to have a lot to look at, but you're also going to have a lot more competition. So that's usually when we see a little bit of a squeeze on pricing. But yeah, at the end of the day, hopefully this gives any viewers some pretty good insight as to kind of what seasonality and the cycles typically look like, so that you can kind of time your entry or get a better understanding of when the right properties might pop up for you.
Yeah, that's excellent. Thank you, Emma.
Yeah, no worries. And then what I also wanted to do was just show, again, obviously if we're looking at over or under asking price trends, we're going to expect price increases. But here, this trend line is the percentage of properties that are selling above asking. And so if we look, we can obviously see at the beginning of this year, and these are, we go up to week 32 for this year for now, what you're going to see is exactly what we've seen with pricing. Beginning of the year, prices were down. They start to increase drastically at the beginning of the year, so we start to get more over asking offers. And then Q2 hits, and I kind of segregated this by this purple line here for Q2. This is Q1, Q2, Q3. We start to see things kind of flatten off. Now, if you track this every week and you get a better understanding of what's going on, you might be able to predict what's going to happen with pricing. But that's only if you're accurately and actively tracking this by week. So what we see is every single week, okay, more properties selling over asking, more properties selling over asking. Here we see a bit of consolidation. So we go, okay, we're seeing a bit of consolidation. Maybe prices are going to start flattening out. Then if we start to track this is when we started to see prices go down in the summer, and you start to see every single week you get kind of lower lows. It's kind of the same thing as like the stock market, right? It's like, how can we actively predict pricing? If we're watching this above or over under asking price, if we look at this trend line and we start to see lower lows kind of every week, then we get an indicator that, hey, maybe pricing is going to continue to go down. Right now, if you look, stop that trend and we're starting to consolidate, right? So I think unless we see the next couple of weeks pop back down here, I wouldn't be surprised to see a consolidation, but this is something that I'm looking at regularly to get a better understanding of, like, hey, where are we about to head back up for my active clients that are in the market? Like, hey, what kind of moves do we need to make in the next 2 to 6 weeks to help maybe save you some money? Or for sellers to go, hey, we should probably hit the market this week or next week, depending on what we think is going to happen with pricing.
Yeah, you're really bringing it with all the graphs today, Emma. This is awesome. I really appreciate the deep dives and breakdowns and pattern recognition for the audience.
No worries at all. But yeah, I hope so. If anybody goes back through the video, what I tried to essentially do was go back with this and show the pricing graph. And so I've broken that down by quarters and by the arrows here, so that you can kind of go back and look at both of these if you want to screenshot this. But they do work in tandem, right? If you look at this graph, they're working pretty well in tandem. So if you want to be very, very, very active in the market and get a better understanding of what's going to happen by the end of the year, this is a really good indicator to get a better understanding, especially if you like stocks. This is, to me, this, like, if you like stocks and you track this is a pretty good higher, lower, low type of trend line to look at.
Yeah, absolutely.
Well, to my point, August is historically favorable for buyers. There tends to be more seller motivation. A lot of these sellers want to get this out of the way, right? They don't want to worry about this when it's sold. If they put something under contract in August, the likelihood is they're going to move in October, so they're not moving. Hopefully it doesn't snow then. We'll see how it goes. But they want to wrap this up before winter. So there tends to be more seller motivation. There are less new listings, but again, that means less eyes kind of on the prize and on real estate because there isn't as much new inventory coming out. And typically what that means is less bidding wars, so more properties selling at or under asking, okay? And then a quick condo market update. So condo sales are down 7% since last month. So we've definitely seen a little bit of a pullback in terms of new inventory hitting the market. Now, the West End has remained flat in terms of pricing. So last month was at 651. This month is at 652 for average pricing in the West. the central area, so this kind of green marking, is down about 1.5%. Okay, so that's where we're going to see a little bit of the pullback, because that's where the bulk of the transaction happened. You can see 100 transactions, and 12 of the 1,900 happened in this green circle here. Okay, and then the East End actually saw a little bit of an uptick in pricing, but that's because it is the least expensive for buyers to get into. So on average now, it's going to cost you $582,000 to get a condo on the East End versus $572,000. So this last month has basically cost you an extra $10K. So if you are, if you're actively looking for a condo in the East End, it might make sense to consider buying sooner rather than later, because prices have gone up month over month since we've been tracking.
Gotcha. Yeah, definitely appreciate the more detailed kind of regional breakdown.
Yeah, for sure. And then just another trend line to kind of look for is days on market, right? So days on market is going to tell us how quickly this inventory is moving. So this purple line that I drew there is 15 days, which would equate to essentially 2 weeks or half a month, okay? So when we see this trend line move downwards from that purple line, that means the market is more aggressive, right? That means that things are trading in, for instance, if we look back here at the beginning of the year when things were crazy, they were trading at 7 days, right? And so we start to see this trend line here from March to August move back up. So that if we start seeing this, what that means is less bidding wars, probably more properties priced appropriately and not necessarily structured for multiple offers and that kind of thing. But right now for condos, we are seeing about a 13, 14 day kind of average days on market. So another kind of cool metric to watch to see what's kind of happening in the market. But if you look here, historically, we see August and September, we have a little bit of a peak, and then we usually see a bit of a pullback. So when we see a pullback in terms of days on market, that means that the market is more aggressive and they're kind of chewing up that inventory a little bit more quickly. And so that could relate to more bidding wars or higher prices. Right. So hopefully that gives any viewers a little bit of an understanding of just another data point that they could follow to kind of see what's going on in the market. Okay. And then to my point, here are two exact. So this property on the left is for Fort York, and this property on the right is in Parkland, so west end of Toronto. Now this is the exact same layout. So 2610 and then 2110. This property here sold April 24th. For $875. This property here just sold on August 9th for $830. So if you don't think that seller motivation is real, it's totally real. They're within 5 floors of each other with the exact same specs. Essentially, this guy did have a locker, so we'll give him $5K generously of a premium there. But we're looking at $40,000 differential. So if you don't think that seller motivation is real, it's super real. Like this literally just happened last week. Okay.
Yeah, it's so much fun with condos, especially these big buildings where you literally have pretty much the apple to apple comparisons, right?
You can't get better comps than condos, because you know that you're going to have the exact same floor plan. And don't get me wrong, someone may have paid a bit of a premium for 5 floors up, right? But that doesn't always happen. But if people don't think that summer is a great time to buy, like this is just an exact example. And then if we look at this one on Lakeshore, this goes to seller motivation. These literally sold within a week of each other. This one's 4204, so higher floor, and 1204. Okay, so exact same layout again, same building. On the 15th of July, this guy sold for $735 on a lower floor. This guy sold whatever it was, 30 floors up a week later for $710. So if you don't think that individual seller motivation comes into play, especially in the summer market, then I don't know what else I could show you to prove that that's true. But those sold within a week of each other for $5K differential, and the guy that arguably should have got more money got less.
Yeah, love these examples. They definitely illustrate everything you've been talking about.
Yeah, and these weren't examples where I by no means dug very deep. I looked at maybe 3 buildings, and I was able to capture 2 of these out of 3. So these are examples that we can find time and time again for sure. All right. And then the luxury condo market, just a quick update. So sold properties have been flat. These were about 18 sold properties last month. New listings are actually down by 50%. We saw this was at 73 new listings. So new listing inventory is down. Average sale price is actually up. The average asking price is actually up to 2.35. And then, sorry, I screwed that up on that one, but that's okay. And then days on market is actually up 42%. So we saw it at 26 last month, and they're up to 37. So obviously not a ton of data points here, but it does indicate that there could be a little bit of softening in the luxury market there, because a lot of those numbers are going the wrong way for sellers.
Yeah, for sure. But definitely, if you're a buyer, that's great to see.
Yeah, absolutely. And then rental market update. So another gangbuster month for rentals. So the final kind of price. So again, I pulled the exact same statistics every single month. 1 bedroom plus dens on the water that have a balcony and parking that are over 500 square feet. The last month we saw the average price was $2,200, which was already up $100 from the month prior, which was May, right? And we're seeing now $2,350 for July. So 6% price increase since last month, which is massive for the rental market, because we've seen it suppressed for so long. Days on market is up a little bit, but we're still seeing things move relatively quickly. But what I wanted to really give any investors from a point of view standpoint is, where are we from the top of the market? Because 2019 really was the top of the market, and we saw a massive drop off, obviously, as a result of the pandemic. So the average price point in July of 2019 for this exact criteria was $2,539, right? That was the average monthly rental price. So we're about 7% away from the top of the market. Now, we just closed that gap drastically in 1 month. So I'm interested to kind of see what's going to happen next month, because honestly, if we see one more month like this, we've closed the gap.
Yeah, that's interesting. I guess just talking about this, any anecdotal stories or thoughts on why that gap is closing as fast as it is now?
I think people are just happy to be back downtown, right? Like, there's life back downtown. There wasn't for a long time. It was like, a little bit of a ghost town. I went to the Fair Mall for my birthday, and I was the only person in the entire hotel. I've never seen anything like that. Right? And so walking downtown, like, the city's vibrant again. People are enjoying it. Like, downtown is getting close to what it was pre-pandemic. And so I think people are just excited about coming back downtown. And, a lot of people moved back in with their parents to save some money, and now go, cool, everyone's back open, let's move back downtown. So, I think it's just, with the reopening, this downtown is just looking a little bit more sexy than it has been over the last year. And I think that's driving people back here.
Gotcha.
Yeah. And then vacancy rates, just so people know across kind of the board in the GTA. We're about 1.7% for Toronto, and we were probably getting closer to 3 or 4% there for a while. So we're definitely seeing that tighten up. So it's not taking as long to fill those apartments as we have seen kind of over the last year. And then just a couple last kind of classic things that I wanted to just describe for the viewers here. These are questions that we get regularly, so I just kind of wanted to debunk some stuff. So how long does the buying and selling process take? Okay, so the buying and selling process typically takes most people about 4 to 6 months start to finish. So we get a lot of people that call us and go, hey, I want to get the keys in 2 months. And it's like, okay, well, if you wanted to get the keys in 2 months, you probably should have bought last week, because closing typically takes 60 days, right? So just to clarify what the process looks like, month 1 is usually prep and education. Again, it depends on the agent that you're working with, but just from our process, month 1 is like getting you prepared, either prepping your home for sale or getting you prepared to actually go see some listings and get your pre-approval. Month 2 or 3 is actively searching or getting your home on the market. and getting an offer one way or the other. And then month 4 to 6 would be waiting for closing. So you need to give yourself 60 to 90 days to actually get the keys from the time that you purchased the property. So if anybody is thinking about buying in 2022, like if you're thinking that you want to have the keys for early next summer, you probably want to start at the end of this year or early next year to give yourself that time so that you don't feel rushed and that you're prepared for the process. And then again, how do I buy at the bottom of the market? Historically, summer and winter are, the seasonal bottoms. So again, August, there is more inventory to choose from, and there's a lower buyer to listing ratio. And your closing date will typically be October to December if you put something under contract in August. And then December, there's usually less inventory to choose from, and therefore there could be a higher buyer to listing ratio. But your closing will usually be somewhere between February and April if you put something under contract in December. And then just last thing, should I buy or should I sell first, right? Mm-hmm. So things you need to consider. If you're thinking about buying a property before you put your home on the market, it should be typically a good rule of thumb is if you're going to buy first, it should be in seasonally aggressive markets, so spring or fall. So there's a lot of competition in the marketplace and prices are rising. You're confident that there's going to be a high level of interest in your existing property. I put asterisks here for the third point, but you can negotiate or make it conditional on selling your home. We haven't seen that in a long time, so that's why I put that there. And that you're prepared to accept an offer just to kind of help you move on to kind of the next phase of your life. But if properties are flat or they are declining and you want more certainty around what the exact number, what your actual net profits are going to be from selling your house, if you're moving to a different location into a slower market, or if you can negotiate a longer closing, then you should consider selling first. So I know it's a very overwhelming process, and a lot of our clients recently have been upsizers. That's really the market that we're working with quite a bit now. And so I'm getting this question a lot, and I just wanted to clarify. If the market is quite hot, then you should consider buying first. But if the market has softened or it's flat, then you should probably consider selling first to buy yourself a little bit of that time.
Yeah, absolutely agree with that, and appreciate you just breaking it down in bullet point form for everyone. Yeah,
absolutely. So, went over this last month. I'm not going to go over that again, but if anybody wants to get a better understanding of, what your profits look like if you're upsizing in a down market or a flat market or upsizing in an up market, go back and watch last month's video. And that's all I got for you guys today.
Awesome. Yeah, really appreciate it, Emma, and definitely encourage you guys to follow along with Emma on social media, on Instagram, or she's got her website there. We'll also have links to everything in the video description down below, and really just appreciate you diving into such detail into those charts and graphs, because I think there's very few people that are going this deep into the numbers, and to me, it just highlights the importance of having an expert on your side, like yourself as a realtor, that really knows the market inside and out, because there's 60,000 realtors or something like that these days in your neck of the woods, and yet obviously not everyone's created equally. And I think, to me, I need someone like you in my corner if I'm going to be jumping in to a market, and I want to make sure that I'm setting myself up for success. So really appreciate you just sharing all your experience and the time that you spend doing this research, Emma.
Awesome. Yeah, thanks, Matt. I appreciate it.